what I'm doing now, I'm recording. You understand? Now, so that this particular content, I will just load it up on that YouTube. You see it, so that anytime you want to watch it, you may still be able to pick what we are doing. You understand?
Voice is going in as well.
Yeah?
Yeah, your voice is going in as well.
Everything, yeah, everything is going in. Even whatever you say will still be going in. Just for the moment while we are doing this. So now, on the monthly time frame, just a rundown, we drew a kind of, we tried to understand the trend. We've seen that it's a downtrend, connecting our trend line from this point to, from this week to this week, and from this week to this zone to a week to anyhow. Then we saw that we've gotten a break into this upside. Now it's still a downtrend, because even if you look at this place, something of such happened here, something of such happened here. It could have, if you drew your trend line, it had a break and continued dropping again. But then that's what we could expect to happen here, except price does something, break above this area here. Except price breaks above this area. You understand? Then we can be able to see something different. But for now, we are going down to the weekly time frame to be able to mark our flaws. In the process of marking our flaws, we have to change it to line graph. On this line graph, what we are simply going to be marking is, this is a flaw. A flaw is basically all the significant lows we can see with our eyes. So this is another low. And those lows basically are still most times considered as break of structure. Now this one is 1, but this one is also, this one majorly is just very significant compared to the other one. It's more significant compared to, like if you look at it, I didn't mark this inner, I don't know, let me see if I can. If you look at it now, I did not mark this inner low here. I marked the major one which created the first drop. I marked this one. So I did not mark this one. I'm marking this one because this one is a significant one. So those are what we mark. You would always see it on your chart, especially using MT4 or MT5. So when I mark that, I mark this one also. Then I mark this one. Now I think after marking this one, I can still see one here. So I'll come here and I'll mark this one. Now all of these things I've marked now is using the weekly time frame. Now it would give us, if you see, you already begin to see that. Yes, there was a zone there, but you can see that price after tapping this line, it moved. Why? Because it's a level. It's a significant low zone normally. You already begin to see it. You can also see that when price at this point now, you already see that when price got into this area, it tapped it and continue going up. You understand? Price also is around this zone, so we can still be looking at that same price moving up. You get? So now the picture is beginning to get a little bit clearer. Now when we go down to this time frame, you will see that now when we marked all these zones, it simply gave us the body, not the wicks. Let me make it a little bit wide. You will see that it gave us the body, not the wicks. Yeah, so I think this is beginning to, it may disturb the eyes or something. Let me see if I can. Is it too dark? Or let's go back to the normal this thing.
Just for us to get used to.
Okay, so yeah, so now if you look at it, all these zones now are basically, we call them significant levels or significant zones. Now since we've done that, we'll now go to the smaller time frame. Now we are just going to be readjusting these lines. If there are more we put, we readjust them down to the 1 hour time frame. Now when we get to the 1 hour time frame, everything will begin to be a little bit much to be obvious, yes, but it may begin to be too much. But let's try, let's see. So we'll go down to week this so it's always just begin to be very. So now when we do that, we'll come down to line graph. Now this one still remains as a level. This one now gets adjusted. This one we have to adjust it again. This one now we can adjust it. This one we adjust it. Now all of these levels we are adjusting basically will balance with the other area. I don't know if you understand. So all of these zones now we adjust them. Now you can see it basically balancing and everything. Now even yeah. So now we'll go down to 4 hours time frame. So 4 hours time frame. So this is one thing with. That is why most times using the app itself, MT5, the app, MT5 app most times is better. But then let's see if this one gives us. Let's see, it's already beginning to end. It says your plan 1 to 1 10. But then it's alright. We're able to still get. It's almost still saying it's the same zones we are looking at. So I'll just leave the markup here and let's go down to looking at what has happened. So now after marking out all those zones, one thing it helps us to do is, so after marking out all those zones at those points, it helps us to be able to identify the kind of trend, what we are looking out to trade on the market, and understand. And this same strategy applies to any chart. Now I'll simply first of all start looking at the trend from where price started from. So if I did it to the smaller time frame, all these zones now will be zones I will mark out. You understand? Okay. All these zones. Let me see. So now if I had done it to the maybe lower time frame, I have to now mark all these levels. You understand? But then I don't want to do that. Let me just go straight to the message. Now, what we'll be looking out for is we have this area here. We call it a break of structure to the upside. Now this break of structure to the upside is passing one message to us, which is price reversing. You understand? Now this particular break of structure, you see, it broke this particular point. Now breaking this point, we had like a break of structure to the downside, and now we're having a break of structure to the upside. Now that particular message is telling us as traders that the character of the market is changing from downtrend to uptrend. If you still see this kind of thing in a form to the downside, inverse of this thing to the downside, it helps us to know that okay, the character of the market is changing from uptrend to downtrend. Yeah. So now, one thing we can easily now do is we pick out our zone. Now there's another thing again we easily can see, which is there was a zone here which we can still classify as a break of structure. You understand? Now this is a major break of structure, this is a minor break of structure. Now with these two information, we can easily now come down and say okay, we'll mark. Now there's a zone here you'll be marking, it's called another block. You understand? That is one thing I like to look out for at times, but majorly you just mark it out, then you can still mark out the overall low. I mark the full candlestick, so I'll mark that out. So these are the two levels you'll be looking out to take your entry. You get? So one, if you're entering here, we would basically be looking at putting, if you are entering here, basically you'll be looking at I'll be looking at taking my first take profit at this particular high. You understand? And I'm putting my stop loss exactly at this low, or I may just give it exactly at this particular low. I just give it a little bit of pips normally. Now this particular trade, and before even that, you still wait for a candlestick, a bullish candlestick to close at that level. You understand? Of your other block. If you don't get tired, just let me know, or if it's confusing. So I'll wait for a bullish candlestick to close around that zone. You get? And that is just it. Once any bullish candlestick close inside this my level, is a strike. Now the same thing I'm going to wait for in this particular area. So those are the two possible levels you are going to be marking. One, the overall low, and two, the low that created a break of structure before the overall, you understand, break. So now this is what we are still going to keep repeating, and you will see this same thing repeat itself as we go up. Now when we do that, we look for a bullish candlestick close. Now if you look at this guy here, you can see that yes, there are some gaps normally called the currency pairs, like this was gap, but then one thing you can see is you can see a bullish candlestick here close. After it closes is when we initiate our entry. Now this is a higher time frame. The same thing we are doing on a higher time frame is what we can replicate on a lower time frame, like 1 hour 30 minutes where entries are going to be done. But I'm just trying to give an overview of what we are going to be looking at. Now that being the case, we simply come here, and upon the entry, now I'm not entering from the zone. This one I just gave an instance. Now I'm not entering from the zone, I'm going to be entering from the particular candlestick close. You get? That is when after marking your zone, you now wait. One is saying is waiting for an entry. So we'll see that when we do that, here now, this particular area now will be my first take profit. This place will be my first take profit, where most times it will always, market price will always hit that point. So this place will be my first take profit, which is this point. That is the most accurate point to get an take profit. You always see price hitting that point most times. Now the next level for my take profit is my next zone. You get? So if After holding take profit here, another point I can hold take profit to is this zone. That is it. You get. If I do that, the only next thing I'll be doing, except if you don't want to swing, which I'm not that swing trader most of the time, you understand? Where you enter and allow it to go up to long term. Those now who have entered with this particular strategy, they'll be waiting for price to get into this level or even this level before they exit. You understand? But now me, when I identify that price is going to go to that level, then we are simply going to be what? We are going to be taking entries, chopping out some entries. You understand? Up to get to where we are going. Now, huh? Yes, that's it. So I don't want to give them you understand? We don't want to give them our money. It's still playing safe. So now, that being the case, one other thing again, if let's take for instance, um, price hit take profit here, which was, let's say this price hit this area and then it retraced. You get. Now when it retraces, we would also see that there was a break of structure here. We will see that there was a break of structure here. I don't know if you get. And the zone which created this break of structure is this other block here. If we go to smaller time frame, we'll be able to pick it out. I mark it out down to the week. So I mark everything now down to the week. Now after marking this zone, when price gets into that zone, it closes above our entry. Then this place now is our take profit for this particular entry or this zone. You see the same repetition of that same strategy. Now there's also something there is also another block below it at the bottom. So if when we mark, we'll be marking two other blocks, one at the low, one at this point. This one will be like the major one we are looking out for, or this one. So you see at this first one, it hits from the bottom, from the top. So this first one hit from the bottom, while this one hit from the top. But now before you enter, this one might have not given us entry because maybe it did not close with a bullish candlestick within this first zone. You understand? So that's another stronger thing to use for an entry. Now, that being the case, now this one enters fine. Now when it gets into this zone, one thing we are always looking out for is we want to see price break our level, then retest into that level. A retest, like we want to see price break into the next zone, which is our line. Remember those lows we marked. So all these blue lines are the lows we marked. So we are now trying to take the reversal to the upside, and we can still sell it from that top side to the downside using the same pattern. Now, price got into this point, it came down, price broke again well into this point. Now what are we looking for? We are simply looking out for our other block, which will be one zone at the top here, which we can see one here, then another one again will draw at the bottom. So now the two levels will be here, but obviously if it's on a 1 hour time frame, it will be clearer. You get the point. But then so either of the levels we are using, we wait for price to close. At least it looks like it closed exactly above the 30 minutes order block. You get. And then what do we simply do? We simply take our entry at this point, and then we are looking out to hit take profit at this high. You get. Whether it went above or all these things down. So we are looking at taking profit either at this high, and then we hold to this point if we don't want to take profit here. You understand? Now in this example here, we can clearly see that. So in this example here, we can clearly see that when we took our entry at this take profit at this point, basically, if you still held it without taking your profit, two things: if you had set break even, it will hit your break even, or if you did not set break even, it will hit your stop loss. That means that is the first loss you are taking. You get. That is it. Now based on whatever you are risking. Now one thing again that happened is, after I did that with either this other block or anything, one will really be choked on what to do at this area. You get. It will be difficult to take a decision here. Though if you are always on the chart and maybe you are trading only this pair, there is a point where an entry came up. And where was that point? Knowing that we are now buy biased. First thing one would see a break of structure here. You see a break of structure here or here, depending on how one wants to look at it, or even here too. Price went to the downside, price went above it. You understand? Then you can see another block. So now one thing one will be easily do is mark another block here, one on 30 minutes, then mark another block again at the bottom. So we'll see it's bullish candlestick close on this other block here, on the one here. I'm just giving you an, like, you understand, it's closed on the one here, which is this area here, that here or here, and then take profit is here. First take profit, final take profit still at this zone. That is what you must just be looking at. What happened after it got here? We got reversals. What is the reversal looking out for? We are seeing a reversal based on this break, and then we'll be marking our other block at this zone here, and then another other block was around here, which got to take profit again. So that is just how we keep repeating it again. This one now, this zone, first take profit, you are now targeting this next zone as second take profit. So it's just a zone to zone trading basically. Now this area again, let's see what happened here. So what happened here basically, we see price got into this zone, it gave us a break of structure, and we mark our zones here. And what happened? All our zones got breached. If we put entry here, stop loss, got flag. Put entry here, stop loss, we got flag. You guys, so stop loss got hit here. Now it's got into this other zone. One thing that helped this zone now to hold was this particular area. So we are only going to, okay, even after marking it, let's see, well, because we are going to only remain with marking this particular candle. You can see it just tapped small, it just tapped small. So this one, though the stop loss and all those things, the risk is higher when we calculate the stop loss. We got, after a close of this bullish candlestick will be an entry. The take profits will still be this high, and it aligns with this particular low here. So that was that for that one. It's just the same thing. So this one now, what are we seeing? We are seeing that when we have a level here, we have another level here broken, and this is a high. Now, how do we enter this kind of a trade, which we have gotten into now? I will remove this. Okay, without even removing it, let me mark something. So first thing we will simply do is we mark this low, and this low is aligning with a significant level. It's aligning with a floor. It's aligning with a floor, which will mark this particular low. Then we have a break of structure also here, and we have another break of structure here. So if we were to do anything, this was the place we are going to mark. Another level we mark here. So now, how do we enter off these two levels? Because when we have a break of structure here, and we have an overall break of structure. So if we are entering here, our final take profit will be either here or here, any of these zones. You get. Now we'll wait for price dropped in. It's closed with a candlestick here. This tiny candlestick, we always call it indecision. That one that looks like a doji. So it's an indecision candlestick. Obviously one will not enter off this candlestick, and that's after this price got into our zone. There was no candlestick that closed above. Only when price got here, it closed. It closed with a bullish candlestick, but not still in our level. But this one will help us to begin to understand that, okay, there's a reversal coming into what we are looking out for. This one closed, all of this one is just the same area. And now why we would have not been able to enter here is this. If we enter here, where do we want to put our stop loss based on our other block? You understand? That we marked. This level is here, we can't put a stop loss, anything around there. So the only thing that we can do is we have to wait for this candlestick to close. Maybe when it closed here, let's say we're using this particular candlestick, when it closes to close here, for instance, we can put our stop loss here. But why we will not be able to, if we take our entry here, why we can't put our stop loss here, here, is because of this low. So ideally what we simply do is we take our entry here and put our stop loss exactly at this low, and then we target this high or this high. Now this high we are targeting is aligning with a floor. You are seeing it now. This high now we are targeting is aligning with a floor. So anything can happen here, but then we'll still hold tight to this high. Now when it gets to this point is when one will take first take profit, and then be looking for this next high. Let me see what happened at this area. If there's a high, okay, it's not giving us that message. Let me go to daily time frame. Let me see if what happened. So that is what we would have been looking at our entry here. Then let's see if we have another low. we have a low, but there's no major low again here. We only can see, we can still mark it as a low, but that is we are forcing it. So the major lows we have seen, all these lows are the major lows. If we want to pick another, maybe we want to force another low to be inside here, but then we will not do that. So this is basically just one concept